Hey guys, in this video, I'm going to go over three stocks to just set and forget. They're undervalued and large cap, so let's hop right into it. First up on the list is Amazon. And before you click away, everyone's heard Amazon. Let me make my point here first. Looking at the graph here, Amazon over the last 5 years is only up less than 40%, which is pretty baffling, considering, they're the leader in AWS cloud, number one in e-commerce, number three advertising giant, and they probably have the most subscribed platform in this world with Prime. So, like, what's going on? Is Amazon's price down because the company is fundamentally deteriorating? Just look at one portion of their business with AWS, and you can see they're forecasting here some pretty serious growth. If you look historically from 23 to 25, they're basically 17, 19%. They're expecting ticks up to 24%. That's a 30% increase in margins. Maybe they're underperforming competitors. But I'm looking at projected cloud revenues between Google, Azure, and AWS, and AWS is significantly ahead of all of the other competition here, 322 billion, with Azure being at 230 and Google being at 130 billion. When you look at the price of Amazon compared to other Mag 7s, they're significantly lagging behind. So it would make you think there's been some sort of deterioration in the fundamentals, but you know, compared against Walmart, Walmart's been top dog since 2014, leading the US biggest company in terms of revenue. And you can see the chart where revenue has outpaced Amazon. Give Amazon was a small company back in 2005, but you can see how in 20 years they've accelerated, and we're about to see a switch in the top dog from Walmart to Amazon in 2026. You don't even have to listen to me. You can look at Congress, and we all know, the greatest trader of our generation, Nancy Pelosi, it could not be insider activity. But Congress's biggest buys here in the last 3 months, number three on the list, Amazon. Interesting. Now, if I had to point out one criticism, but I will back it up with a defense, their operating margins did drop from 39 to 32% here. You can see I'll highlight the drop right here. And that's in one quarter, which can be concerning to some people. But if you just take a look right below, you can see that the decline in the operating margin is, directly correlated with the uptick in depreciation. And the uptick in depreciation is a result from all of the capital expenditure spending. Depreciation's up 18% year over year. As you can tell from the chart, revenue's set to explode. And I think robotics is only going to bolster revenues and further improve the margins. So my point, why are we trading at such a 10-year low multiple of EV to EBITDA when the company is going to become the leader in revenue in America, largest size company, and then they're breaking into the cusp of the new, investing thematics of robotics and automation and artificial intelligence. You know, Consider it within the Mag 7, consider it on its own. I think this company has a lot of upside from here. Next up on the list is LVMH, Louis Vuitton Moet Hennessy. Arnault is the owner, the family-owned business, and some of the brands, if you haven't known, it's a very high luxury brand. Hennessy, Dior, Louis, Tiffany, Fendi, the list goes on. One thing I always track is insider buying, right? There's no one that knows a company better than the insiders and management at the company. So if you take a look here at the insider buying chart for LVMH, green is a net buy and red is a net sale. And you can see all the piled in 2025. The stock has been beaten so down. Management as well as the Arnold family are buying in significantly. And let me just summarize this interesting quote from a while ago that Arnold said, and I think it'll resonate with you. The difference between iPhones and Dom Perignon. In 50 years' time, will the iPhone still be used? Or the people who are making it today, will they have found what will be at the cutting edge at the time? I don't know, but I believe I can say without being mistaken that in 50 years' time, we will still be drinking Dom Perignon. So here's LVMH. Here's the price, 5-year chart, and you can see the downturn starting halfway through 24 and going straight down through 25. I mean, in its lowest point, it was trading at $100 in 2025. And if you look at the underlying fundamentals here, we have revenue, earnings per share, and free cash flow. The company's foreign, right? So we're gonna put it in constant currency in their currency. And you can see revenues exploded through the roof. We see continual improvement in earnings per share and continual improvement in free cash flow per share until the problem started to subside here in 2023 and 24. So when is it enough? It's an overreaction for sure. And just by looking at the chart here, you can see the stock price plummeting down from an overreaction of a 3-point drop in margins due to tariffs, increasing prices, some logistics problems, and a downward buying in China has really hurt them. All right, the final stock on this list to set and forget is Brookfield Corporation, ticker BN. Management at this company has never not met expectations. I mean, they are on the ball here. Just look at this chart, and on the next page, it'll continue. For 30 years, we've outperformed global equity markets. 19% annualized over time versus 11%, 9%, 6%. I mean, they dominate. And don't think they're cherry picking. You can look over 20, 10, or 5 years, and they get better. Now they're at 22% from 19%. This is one of the best management teams around. So what are the major trends that Brookfield's trying to capitalize on here? It's trifold, and there's three. One being AI innovation driving the need for massive infrastructure. I'm sure every week you see something in the news about a new data center opening, a new deal being closed. Number two, they plan to take advantage on the aging population, which is driving demand for new wealth products. Then three, Brookfield believes there is a global real estate recovery underway. Brookfield's already underway on laying the groundwork for the first AI factories. In their comparison, nice to think about it this way, they're the new railroads and highways and water systems of the next decade, literally. And you can see this is going to be multi-decade expansion, but you can see already right now they have a $200 billion investment, 40 billion in Europe, or 125 in North America, and 20 billion in the United Kingdom, with 7 identified sites and a 6 gigawatt, compute infrastructure capacity. Few people, very, very few companies are able to show the track record that Brookfield has demonstrated. And I mean, when you're going into such a capital intensive investment in such an important industry and time in the world, who else are you going to put your faith in? I mean, look at the annual capital inflow goals they just have for themselves. The institutional capital, 100 billion. Annuity flows, 50 billion. Wealth distribution, they have $200 billion annually to spend. So, I mean, everyone knows real estate hasn't been performing too well. It's an inverse relationship with interest rates. Interest rates go down, prices go up. Interest rates go up, prices go down of houses. It's 1 to 1, just about. But what's interesting is other people were pulling back. Not a lot of people were buying real estate. Look at everyone's favorite stock now, Open Door. They don't even buy real estate. They'll refer you to somebody. Um, but Brookfield, this is who you should be looking at. Someone who's actually been buying, stay buying, has the commitments, has the reputation, has the performance and execution behind them. They've been buying, and they're going to reap the upside of the real estate market that they believe's to come. Ooh, ain't that a pretty looking stock chart? I mean, all-time gains, I mean, through the roof. I mean, exceptional performance and company. There's no DCF, there's no market comparables. This is something you believe in the management and the execution and the track record, and you know the company, which you should look into. There's Brookfield National, and there's Brookfield BAM, Brookfield Asset Management. There's a couple little, I think there's three of them, but it's just interesting to see how the company's grown and kept performing. And, I am a buyer. This is one of my favorite stocks. All three of these stocks are great. If you made it to the end of the video, I appreciate it. Enjoy, and I'll catch you the next time, guys.